front of me is the crude oil market. Now we all know the crude oil dropped to, well, depends what chart you are looking at. Some chart like this one here says that we went to the zero levels. On some others we went even to -10 or something like that. But from well, since then we have been on quite a rally. And if we were to determine, because actually this is what you always want to do, you want to determine where we are heading, likely in the longer term, or at least for the next couple of days. So we do that simply by looking at some EMAs, which means usually if you look at the lowest line, the blue line here, which is the 200-day EMA, we always want it to be the lowest one. And the red, which is the 50-day EMA, the purple one, the 20-day EMA, should always be above it. So this is how we can determine an uptrend. Because of course we could also say here is a trend line, and so we are on an uptrend here. But if we look at this line here, we also were on an uptrend here, because, or if we make it like this, we were forming higher highs, higher lows. Depends how you draw your lines here and there. But at the same time, we were constantly below the 200-day EMA. So I forgot my mic. So we want to determine the uptrend simply by looking at the EMAs, and you can see that we had here a couple of crosses. The first one was the purple line, the 20-day EMA above the crossing the blue line, the 200-day EMA, which indicates that we might see here a change of direction, which means if we had here this bearish direction and the purple and red line crossed the blue line to the downside, and for example here we had the first cross, so this could have been the first indicator to a change of direction to the upside. But the red line here never crossed the blue line. On the other hand, here we started with the purple line again crossing the blue line, which might indicate that we are on an uptrend. And after that we saw the red line crossing, so which means here we could actually see a longer term bullish trend. So as soon as you see the two lines crossing, the 20-day EMA and the 50-day EMA crossing the 200-day EMA, chances are pretty high that we might go longer or bullish for the next couple of weeks. So once you determine that we are on an uptrend, you go to a smaller time frame. In this case, it is the 1 hour chart here in my case, and so, well, if you go back to the daily, we had the cross. The cross happened here on at the beginning of December. So now going to the lower time frame, the 1 hour chart. Not what I was looking for. We can always add extra indicators to help us more. I mean, don't get me wrong, if you're new to trading, you shouldn't probably use that much indicators, because simple trading requires simple strategies, and not that much indicators are needed actually. But if you look at this period from, well, let's say February 1st to February 15th, if we zoom out a little bit, we can see here kind of a upper half of an eye being formed. So if we were to draw a lower part, we could actually see something like an eye, which means that if we zoom in, we have been here constantly trading above the 20 and 50 EMA. Here we retested the 50 EMA once, here twice. So we have been constantly on a bullish move. And suddenly what happens here is that the 20 EMA and the 50 EMA come closer together, while at the same time coming closer to the 200 EMA. So we want to see here a narrow space between the lowest point, which is here, and the 200 EMA to be as narrow as possible, like here, and at the same time, because we can see here that the 50 EMA and the 20 EMA kind of remained or had the same distance between them for most of the time, and here suddenly the space between the two EMAs narrows. So this is what you want to look for, the half upper eye and these spaces narrowing, the 200 EMA and the lowest point, and the 20 and 50 EMA. Now at the same time we are seeing here the lowest point being formed, which is also when the RSI was pretty low. And if we draw this line here, the lowest point the second time when the RSI was pretty low actually never reached that level, but it came close. So actually it is along the support line here. If we go back from it, we had here a resistance line that is now being formed into the support line here, crossing the 200 EMA. So we rebounced here once, and then we had the narrowing part here, and the second time we came close. Now the entry is really simple. Once you determine the downfall to the support line here, we can see that the RSI is pretty low, between, well, 40 and 30, and the MACD here came under the 0 point. So once we see here the cross after coming closer or retesting the support area, we can see here a cross between the MACD, the longer and the shorter line, which is here. And the moment we see this sign, this cross, it could be either one of those candlesticks. Maybe you could enter here if you zoom on to smaller time frames, because you can see that the blue and orange line are getting closer together. So we want to enter at one of those areas here once we see the cross at the MACD. And now we could actually go with a stop loss below the lowest candlestick here. Now for the exit, we want to target the previous highs which would be here almost a risk reward of 1 to 2. But actually, since this is a very bullish sign and bullish trend, we wanna go here for a bigger risk reward ratio. So we wait, especially here. We see here a cross again between the 20 and 50 EMA, which are suggesting that we will see a bullish move for the longer term. So now we see here the MACD turning above 0 and the RSI turning above the 50 levels. So we are in the bullish part now. And if you see, the green candlesticks are very bullish here. So you don't want to enter. You wait until we see this bullish movement continuing. And while the move is going higher, you could always adjust your stop loss and put it first to break even and then even to the previous highs resistance area here that we broke. So the entry was here, stop loss was here. Now, as you can see, here the MACD and the RSI are pretty high here at 85, 84. And here the blue line and the orange line, the MACD are crossing, which is to say that this here would be our exit. So if we again take a trade here, exit would be well here around. So we have here a risk reward of 6.27. Now, of course, it depends on your entry exactly, on your exit exactly. Maybe if you're lucky, we can exit even at a higher level or get into a little bit of lower levels. But at the same time, you could put your stop loss below the support area here. So you would have a risk reward of 3 point. But the thing is, why this trade is a really good one is actually because of the bullish momentum. Because we don't have to, you can always go for a simple trade for a 1 to 2 risk reward ratio, which would be something like this here, where we are targeting the previous highs around here. But in this case, you could even let it run longer and adjust your stop loss to break even, or your first profit target, which would be here. So this would be your first target. And then, of course, you could zoom out to bigger time frames and look for another resistance area here or there. But here you would have your first target, and the cross would be your second target. So around here. I mean, if we take a look at the momentum, since it is so bullish, we can see that it went much higher, so we could have held this trade for longer, but that's not what we want. We want to trade this half upper eye for short amount of times, which means if we enter here, we exit here, which is a trade that lasted not even 1 day. So even for swing traders, this is very short. But anyway, this was the trade of today. So thanks for watching.